Gold continues to rip to new all-time highs, and Bitcoin starts to show signs of life. And all eyes are on the Fed, who are expected to cut rates tomorrow for the first time in years. But behind these market moves is a much bigger story, a reset of the global monetary order. The US is turning to stablecoins as a lifeline for the dollar, just as BRICS nations double down on gold. Today, we're unpacking the battle lines of the new monetary system, and why Bitcoin, as a revolutionary force, may be the wild card no one is expecting. Welcome to No Second Best, the show where conviction meets reality, and reality points straight to Bitcoin. I'm your host, Hurley. Now let's get into it. Gold is breaking out to fresh all-time highs once again today, hitting $3,700 per ounce, and Bitcoin is showing some early signs of life, up 1.5% on the day, and inching back towards $117,000. Meanwhile, equity markets are bracing for tomorrow's Fed decision. The base case is a 25 basis point interest rate cut, but with debt service costs exploding, Powell and co. may be forced to go even bigger. But here's the bigger story. The Fed simply doesn't have the luxury of choice anymore. With deficits north of $2 trillion and interests, defense, and entitlements consuming nearly the entire federal budget, nothing can be cut. Which means the Fed's real mandate is simple: fund the Treasury at all costs. And that's where stablecoins enter the picture. By pulling trillions of global demand into dollar-backed crypto, America is trying to manufacture a new pool of buyers for its debt. Even the Kremlin spelled it out last week, accusing the US of weaponizing stablecoins to shove its $37 trillion of debt into the world, then devalue it and reset the system. And while Washington plays for time, BRICS nations are quietly preparing their counterpunch. Local currency trade settled in gold. And ironically, that's actually more capitalist than the dollar system we live under today. Real assets for real trade. So let's turn to Luke Roman, who's been ahead of this shift for years, and hear why stablecoins and even Bitcoin may be America's Trojan horse.
Is the monetary reset that the BRICS is trying to achieve the same as the one the US is trying to achieve through things like Genius Act, stablecoins? Are there two simultaneously underway that are battling each other? Or actually, are we just moving toward a neutral reserve asset, gold, maybe in the future Bitcoin, and this will all actually work out in the US's favor in some ways?
I think there's a battle for the moment. I agree with that sentiment. I think ultimately the Genius Act is an attempt to find repressible balance sheet. If they can get stable coins big enough, that lets them do a couple things. Number one, it conceivably, depending on how they manage it, look, if Bessing comes out and says Eurodollar markets are no longer eligible for swap lines, but everything in these stable coins are, that could conceivably create a flow of capital out of Europe and around the world into these dollar stable coins, which will be backed by T-bills. I don't see how what he's trying to do doesn't end up being good for Bitcoin. I think ultimately he needs a much higher price of Bitcoin to drag stablecoin market cap higher anyway. And in this sort of dynamic, look, if he sucks that much liquidity into stable coins and then we start using these stable coins, right? JP Morgan starts issuing stable coins. One part of the Genius Act that it's been made apparent to me that is not that well understood is that bank reserves can be used to back stable coins as well. Part of the reason why QE wasn't like wildly inflationary is because essentially banks were bribed with interest on reserves to not lend those reserves out. What I'm describing and what the Genius Act provides for by having reserves being able to back stablecoins, if they start being used as money, that's like the banks taking the money out and just injecting it into the economy. That's wildly inflationary. Is that good for the dollar, bad for the dollar? If they pull the money over here, I don't know how that nets out, but I know one thing. It's really good for Bitcoin. I know it's really good for gold. And so again, I'm trying not to grow a brain about it. Just buy gold and Bitcoin and they can figure that out. So I do think they're trying to maybe stand up through the stable coin. I think there's two dynamics. I think there is dynamic one, which is, oh my gosh, we need repressible balance sheet like yesterday. And then I think dynamic two is ultimately, if we're in this great power competition, and part of that competition is what's the new and future global reserve asset, then I think, it's partly can be what he's doing with stablecoins can partly be seen as trying to stand up Bitcoin as a competing reserve asset, which, by the way, has competed very well against gold over life to date. Last 4 years, okay, but life today really well. So let's see. But I do think there's this competition between Bitcoin and gold as the next global primary reserve asset that is starting.
That's the paradox. Stablecoins might look like a lifeline for the dollar, but they also risk unleashing inflation at home. The US is buying time. BRICS nations are buying gold. And in between sits Bitcoin, an asset neither side can control. And this is why Groman says the so-called rules-based order is already dead. It just hasn't been marked to market yet. And as this reset unfolds, the question becomes, will gold or Bitcoin take the mantle as the next true reserve asset? In 2025, gold has outperformed Bitcoin, which might surprise people who expect Bitcoin to lead in a debt-driven inflationary world. Natalie Brunel pressed Luke directly on this point, why gold is running ahead while Bitcoin lags. And here's what he said.
So let's talk a little bit about Bitcoin, because a lot of people think that's where we will end up in terms of a neutral reserve asset, even though we're seeing all the performance really with gold this year. But people do think that Bitcoin should be higher right now. Why do you think it's not?
I don't know. I think it should be higher. And knowing what I know, I'm still buying Bitcoin. I buy gold and Bitcoin every week at these prices. I don't know.
So why
I'm not
aren't
buying
we at like 150 or 200?
I don't know. Bitcoin's kind of a funny thing. As someone who's been in markets for 30 years, it does nothing for forever. And then in 2 weeks, one of my mentors in this business, great smart guy, brought me along, just amazing. Said to me, he always had a lot of phrases. One of the phrases he always said is 80% of the moves come in 20% of the time. And I just think the thing I hear most about Bitcoin is, it's just a tech stock. Bitcoin's just a tech stock. And in the short run, I could see that. Call up a correlation. And tech stocks act like death. There's some of they've broken some technical stuff and whatever. I get it. I don't think it's a tech stock. I think that's going to fail. But until it does, I think short-term traders are going to continue to trade it like a tech stock. NASDAQ's down 2%, Bitcoin's going to be down 3%. NASDAQ's up 2%, Bitcoin's going to be up 3%. But we're quickly getting to a spot where I think it's going to be seen as it's not a tech stock, it's a neutral reserve asset. And I think events are going to prove that. And I think that'll ultimately be one of the 20% of the times when we get 80% of the move.
In the short run, traders still tend to lump Bitcoin in with risk assets, while gold gets treated as a safe haven. But there's a stark difference that the market is missing. Gold can't move at the speed of the internet. Stablecoins are built on shaky debt. And Bitcoin is the only one with a mathematically fixed supply, which means the money flowing into gold today is just the opening round. Over the long term, Bitcoin is positioned to take the crown. And that brings us to what really separates Bitcoin, the one factor no other monetary asset can claim. And for that, let's turn to Eric Yakes.
The number one fundamental reason Bitcoin is going to go to $10 million is because no other asset has a mass movement or a revolution backing it. That's the qualitative characteristic, I think, of Bitcoin that makes it fundamentally distinct from any other investment, is just the fact that because there's a revolutionary movement backing it, there's this perennial bid for demand. And really the only other thing that I think exists in the world that has that right now is the Federal Reserve. When people say, don't fight the Fed, there's the Fed put, don't bet against the Fed. That is something that's changing now, because I think with Bitcoin, we have our own Fed put. We have our own, when things go down, we have a mass movement that's buying this. And that's something that you can't really stop over time. Bitcoin is just water, and it's moving, and it's finding the path of least resistance. So one of the things that I put into our primary investment philosophy for Epoch, for those listening, our venture capital firm, is Adrian Bijan, who is a physicist from MIT, who came up with this theory that he called the constructal law. And the constructal law is just basically, how does everything grow? How does growth happen in general? And his law was that if you look at trees and how they grow from a trunk branch structure, and if you look at veins in your body, or you look at river networks, or you look at you see this very consistent pattern through how things grow. And that's what we're seeing with Bitcoin. We just see things following the path of least resistance. That's what happens when branches are growing off a tree. They're finding sunlight. They're finding the most accessible resource near them. And that's just logically what's happened with adoption over time. It's moving like water through cracks, and we're just seeing the most accepted next step for adoption that happens over time. So it looked like we had this populist movement that got Trump back into office. Trump realized this voting party is significant. I'm going to support this asset and I'm going to try to monetize a bunch of shit coins for my family off of this. I don't really care whether or not he understands it. I just care that it's just water flowing through cracks. And that puts us in a better position now because we've spread even further to actually have the good forms of adoption in the future. Because the more people that support this, the more people that have skin in the game with Bitcoin, that's another thing that makes Bitcoin unique is we have millions of people all over the world who all have some sort of skin in the game to use the asset. You don't get that with stocks. You don't get that with bonds. You don't get that with any form of investment really other than Bitcoin. And that's the mass movement potential behind it. What's a mass movement where everybody has a skin in the game and everybody gets rich off of that? That's basically like property rights, right? That's what spawned the US. That is significant. That incentive is unstoppable.
Sure, gold has history. Stablecoins might buy the dollar some time, but only Bitcoin has a global revolutionary movement behind it. Millions of people all over the world already have skin in the game. That creates a perennial bid, something no government, no central bank, and no institution can shut down. And that's what makes Bitcoin unique in this battle. It's not just another monetary asset. It's the only one with a movement, an army of holders, and a fixed supply that can't be bent to anyone's will. That's the game theory playing out in the long term. So if you're thinking about how to position yourself in this reset, you might want to check out Swan Private. If you're a high net worth family or business thinking about Bitcoin for your balance sheet, Swan Private works with you to design a tailored Bitcoin acquisition strategy, always anchored in self-custody. Visit swan.com/no-second-best to start building towards generational wealth today. And you won't want to miss our free webinar this Wednesday, September 17th. The magic number Americans think they need for retirement is 1.26 million, but the average account is only $88,000. That's not a failure of saving habits. It's a failure of the assets most people are told to save in. We'll show you how adding Bitcoin to your retirement portfolio can accelerate your path to financial freedom. Kristen Thompson and Isaiah Douglas will walk you through optimized portfolios and answer your questions live. So register now. The link is in the description. And if you want to meet the thinkers, builders, and policymakers shaping the future of money, come join us at BTC in DC just 2 weeks away, September 30th and October 1st, at the historic Kennedy Center in Washington. This is more than a conference. It's where Wall Street, Washington, and Bitcoin collide. Use code SWAN for 10% off your tickets, but move fast because they won't last. And finally, a quick shout out to Mara, the world's largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So to recap, gold is ripping higher, Bitcoin is stirring, and the Fed is trapped. Stablecoins may be America's Trojan horse, BRICS are leaning on gold, but Bitcoin is the only asset with the scarcity and conviction to outlast them all. Which brings it back to you. Do you think stablecoins will extend the dollar's reign? Or will they end up accelerating Bitcoin adoption? Or maybe it's both. And in this battle for money, will gold hold the crown a little longer? Or is Bitcoin already poised to take its place? Drop your thoughts in the comments. Don't forget to hit the like button and share this with someone who needs to hear it. And subscribe to the Swan Bitcoin channel for more videos every single day. Thanks for watching, and remember, there is no second best money.